This is the Tidecrest Triple Threes for August 2026. Each month, we spotlight 3 numbers impacting the capital markets, 3 stories shaping investor sentiment, all in 3 minutes. Let's dive in. 780 gigawatts, the AI power pipeline. News reports have come out that U.S. data center projects could require roughly 780 gigawatts of power capacity, if all of them are built. For perspective, that's more electricity than the entire U.S. uses at peak demand today. Why it matters. That number shows just how massive the AI infrastructure build-out has become. It's no longer just a tech story. It's becoming a power, construction, and industrial story that could shape capital spending for years. It also highlights why utilities and energy infrastructure have become some of the biggest beneficiaries of the AI investment cycle. Negative 23,000. Private jobs lost in July. U.S. private payrolls decreased by 23,000 in July, according to the U.S. Bureau of Labor Statistics, marking a noticeable slowdown from May and June of this year, which added 63,000 and 20,000 jobs respectively. Why it matters. This is a clear signal that the labor market is cooling. And for investors, that matters because softer hiring can potentially support a more dovish Fed outlook and possibly future rate cuts. While at the same time, the job market is one of the main engines of consumer spending and economic growth. So it's a number many economists and investors are closely watching. 8,000. The S&P 500 target that keeps moving up. The S&P 500 is near record territory, and over the past several months, some of the largest investment companies on Wall Street have continued to revise the year-end target upwards to 8,000 and even beyond. Why it matters. Price targets don't predict the future, but they help illustrate where Wall Street believes earnings and valuations could go. As markets reach new highs, investors are asking whether corporate profits can continue to justify current prices and even higher targets. Middle East tensions are still a wild card. Geopolitical uncertainty in the Middle East continues to influence energy prices, inflation expectations, and consumer confidence. Why it matters. Even when markets calm down, households still feel the impact through gas prices, shipping costs, and the broader cost of living. That makes the status of the region one of the most important sentiment drivers in the global economy right now. The Fed is still the main event. Markets are still debating the Fed's next move as slower job growth competes with persistent inflation pressures. Rather than focusing on how many rate cuts might be coming, investors are now weighing whether rates will stay higher for longer, start to fall, or even potentially begin to rise. Why it matters. Uncertainty around the path of interest rates keeps borrowing costs, mortgage rates, and market fluctuations in flux. It also means that we're in a situation where good news can be seen as bad news if it makes rate cuts less likely. Tariffs and trade tensions are back in focus. Trade policy continues to create uncertainty for businesses, consumers, and investors as companies adjust pricing, sourcing, and supply chains in response to tariffs and changing trade rules. Why it matters. Tariffs can quietly filter into everything from retail prices to corporate margins. For investors, this creates several risks at once. Higher prices can complicate the inflation outlook, pressure corporate margins, and influence expectations for interest rate moves. It's going to be important in the months ahead to get a sense for whether pricing pressures or slower growth ultimately has more influence on the markets. That's the Tidecrest Triple Threes for August 2026. 3 numbers, 3 stories, 3 minutes. We'll be back next month to track what matters most. Thanks for watching.